All right, good morning. Let's go over today's trade plan. So in the overnight session, the buyers held up ES pretty well, and they remain in control in the short term. Bigger picture, I think that this can still be a short-term bounce off of a very oversold condition in the market. So it doesn't necessarily mean that we're going back to the all-time high just yet. And especially given the fact that we have the Fed announcement tomorrow, it seems unlikely that we would reverse the liquidation move 100% and actually hold those levels. So, that means that we could head higher from here and test some of the resistance zones above, but I do expect sellers to be active at those zones because I think bigger picture, there hasn't really been much of a shift. We've seen strong buying off of 54, but again, that could be simply a bounce off a very oversold market, and the market may be due again for some more balancing within this recent range, and there's still that open gap at 68.5, and that could come into play either today or tomorrow. So as I mentioned in yesterday's recap video, that 68.5 gap is a risk point for buyers, and we just have to keep that in mind. So, because of the bigger picture liquidation scenario and then the short-term strong bounce, my bias right now is very neutral. I'm open to moves in either direction. I'm still going to be more cautious on the long side, and I would still take shorts at the resistance zones above. 84 quarter to 86 quarter is a zone that was tested and rejected yesterday. So, that one calls for some caution since it would be a second test. But, above that, 89.75 to 91.75, the 92.75 level, those are definitely areas where I expect sellers to be active on first test. And then we have strong resistance at 96 quarter to 98 quarter. That's essentially the balance area that we broke down from. So, I don't even know if we're going to get all the way up there on the day time frame, but if we did, then that would also be a good spot to sell. Right off the open, we're going to be watching the activity around 80 quarter to 81.75. That's a heavy area of acceptance. We have yesterday's VPOC and close there, and we also have a high volume node at 81.75. So I'm just going to be watching to see how the market is treating this area. Is it going through it pretty quickly and swiftly? In which case, we could get a move up to the 88 or 89.75 to 92.75 area, or is it struggling with that 80 quarter to 81.75? In which case, if we reject it swiftly to the downside, then the 76.5 to 77.5 may not hold, and we could get a move down to 74.5, perhaps get some rotation, and then eventually make a downward move towards 68.5 to 70.5. Now, in the event of a downside move, I still expect buyers to be active as well on first test of the support zones, and we have the bull bear zone now at 64 to 66, and that's essentially the bottom of this recent bigger picture balance area. So that's a spot where the selling could shut off on the day time frame, and we can start balancing yet again. We have again the Fed number out tomorrow, so I think because of that we're not going to get sustained movement in either direction. I think if we move lower, we can still attract buyers, and if we move higher, we can still attract sellers and at least get rotational movement at the zones. So, right off the open, we're going to be judging whether there's enough strength in the market to, stage a upside breakout and go through 84 quarter to 86 quarter, or is the market more likely to fail at these higher prices and head lower towards 68.5 to 70.5? And that's how we're going to figure out where we're going to be more active. Whether we want to be more active on the short side in the first half hour to 1 hour, or more active on the long side. And if that's something that's difficult to determine in real time, if, ES is just kind of chopping around, then there's no trade, right? So we need to see some clear signals on which way ES can go, because right now it's very much in the middle of a range and it's simply consolidating yesterday's upside move. Yesterday we got the break above the recent 2-day balance. Now overnight session, we consolidated that breakout, and at this point we can either get continuation or we can fail and go down to the gap at 68.5. So we're open to both sides, and it's something we're going to have to determine in real time, and the 80 quarter to 81.75 area can help us figure that out. We'll keep an eye on the internals. We should see a rising AD if this is going to head higher. I'm not expecting the AD to open at a very high level because we're opening right around yesterday's close. So which way it's trending is going to help us figure some stuff out. Keep an eye on the NYSE tick. See which way that's trending and whether it's spending more time above zero or below zero. We want the volume to pick up a bit if we're going to get any decent directional conviction in the market. Otherwise, it could just be some continued, back and forth type movement. So, all that is going to help us figure out whether, we should be aggressive in the market or just wait for, the ideal trade location. And then if we miss it, we just let the trade go. Because, as you saw yesterday, in a low volume, choppy environment, you definitely don't want to be taking continuation type trades or breakouts or breakdowns because there's no follow through. So, that's where the relative volume is going to come into play and help us figure out, is there potential for follow through? And if we're running high volume and then we get a break to either side, in that case we can expect follow through and some continuation, and then we can take some of those aggressive trades or continuation type trades if we missed the start of the move. So those were the main ideas heading into the day. The short-term bias is neutral. The bigger picture bias is going to still remain bearish until we see some continued follow-through and resolution of this recent liquidation. So still going to be more active on shorts, still going to be cautious on the long side unless we're getting really good trade location. So let's see how we behave off the open. We have the housing market index out at 9 a.m. Central. Not a huge market mover, but it's the only pending econ report during the day session. So we'll just be aware of that. And then the big news is going to be the FOMC announcement tomorrow. So let's see how we deal with the 80 quarter to 81.75 off the open, and we'll take it from there.